Super. Thank you, Lynn. And good morning, everyone. Welcome to the Ottawa Board of Trade Rebound Readiness webinar series. My name is Su-Ling Ching, and it's my honor to be the President and CEO of the Ottawa Board of Trade. I want to say thank you very much to our presenters today from KPMG, also to our community partner, Ottawa Citizen, and our event sponsor, Enbridge. It's with the support of our member businesses that we're able to deliver programming such as this to support our business community. So I welcome you here today and commend you for taking some time to be here with us live or watching us as a recording as you continue to navigate these uncharted waters of COVID-19, and particularly as we begin doing more to reopen our economy. Very excited to hear the news from the province yesterday that we're entering stage 2, and Ottawa got the green light to go into stage 2. And so just want to commend businesses like KPMG for helping our business community navigate what that means, and at the Board of Trade, working with our member businesses in order to support you. I just want to make mention of a few programs. The first is that we have through the Canadian Chamber, we do have a grant that's live right now for application of up to $10,000. The deadline to apply for that, and this is to help with recovery costs, is June the 12th. We also have our business hotline through the Canadian Chamber that is running through till the 3rd week of June, where you can call and get advice around the programs that are available to you. Also, we'll be announcing a series of webinars over the next few weeks to help with the regulations as they pertain to each sector. And so we look forward to rolling that out as well. So it's my pleasure now to introduce our expert presenters from KPMG, and we want to thank KPMG for being a strong supporter of the work of the Ottawa Board of Trade as we create community prosperity. And so I want to say welcome to Stacey McMillan, and she's the business development person at KPMG, and she will be introducing our presenters. So welcome, Stacey, and thank you again for organizing this webinar today.
Thanks, Su-Ling. Good morning, everyone. Welcome. Thank you to the Ottawa Board of Trade for inviting us to join you today. As Su-Ling mentioned, my name is Stacey McMillan, and I am part of the business development team in our KPMG enterprise space for both our Ottawa and Canada offices. I think it's safe to say that COVID-19 has caused a global disruption unlike anything the world has ever seen. In just a mere few weeks, we've seen markets fall, then rise, only to fall again, supply chain and production disruptions, workforce restrictions, travel restrictions, reduced consumer spending, you name it, the world has literally been turned upside down. But the good news is we can navigate through this. We're seeing innovation like never before. We're seeing companies pivot in mere weeks, things that would have taken months, if not years, to do in normal times. So while there may be silver linings in the midst of all the chaos, there is no mistaking the fact that many private companies are fighting a huge battle right now. We're talking to our clients every day, many of whom are experiencing the same challenges. We'd like to share these with you in our session today and hopefully provide you with some guidance on how you too can navigate our new world. With that, I'd like to introduce our presenters. Kaz Raymond, a forensic partner, Pat Cody, a partner in our deal advisory services, and Paul Summit, our senior manager who specializes in cybersecurity. Here's a quick look at what we'll be covering today. We're going to be starting off our presentation with an overview of business interruption insurance, and then we'll hear an update on M&A activity and valuations, and then we'll finish off with cybersecurity and the key considerations during COVID. I understand that at the end we'll have a Q&A, some time for some Q&A, so please, we'd like you to hold your questions until then. So with that, let's get started, and I'll hand it over to you, Kaz.
Thank you, Stacey, and thank you, Lynn and Su-Ling. Happy to be with everyone this morning, and I wanted to give you a bit of an overview on business interruption insurance. You know, I think in the context of the current pandemic, a lot of organizations are thinking about, well, where are we going to get cash flow? That's been the #1 priority. and the federal government and others have provided some relief in the form of wage subsidies and loan relief, etc. But a lot of companies are looking at, is there any other avenue for recovery? And business interruption insurance is just one of those avenues that might be available to organizations. So what I want to do this morning in a very short period of time is give you an overview of what things to look for and what we're seeing in our clients' policies as well. And certainly happy to take any questions at the end. So let's just quickly start with what is business interruption insurance. And really in its simplest terms, business interruption insurance is really a form of insurance that's meant to cover for your lost profits and any incremental or extra expenses during a period of interruption or disruption in your business. So clearly, most businesses have been interrupted or disrupted, and there's a period where you're going to lose profits. The problem with business interruption insurance, though, is most policies cover for what they call direct physical loss or damage to your assets or your property. And usually it's caused by what they call an insured peril. Those insured perils are typically things like fires, floods, those types of things. So something more typical that you would see as opposed to a pandemic or infectious disease. So, most commercial policies, so, it's maybe a bit of bad news, but most commercial policies don't cover for, such unusual events. Insurers like to cover things that they know are the risks that are facing organizations, and insureds also like to be covered for the risks that they know they could be facing. A pandemic, of course, is not something that you would expect, and not usually something that insurance companies cover for. However, there are policies, and this is maybe the good news, maybe a bit of a ray of light, called all risk policies. And all risk policies is exactly that. It's meant to cover for all risks unless specifically excluded. And so often in a lot of policies, if insurance companies are savvy and are thinking about the different situations that have occurred over the years, like SARS and MERS and others, they have exclusions for different things like viruses, and it's amazing the wording you see: viruses, pandemic, infectious disease. So there's exclusions there. But we've seen a number of policies with our clients where those exclusions are not listed. And then it becomes a question of, do you have coverage? If you have an all risks policy and there's no specific exclusion, are you by default covered? And that's where the direct physical loss definition comes in, because you may be covered, but you have to have a direct physical loss. So, here we go again, a bit of a circle. There's been a very recent court case. It was in April, and you can look it up. It's the MDS versus FM Global case. So Google it and you'll see all kinds of material written about this case because it's really the only one of its kind so far that talks about really favoring the insured over the insurer in relation to this issue of physical damage. And in the case of MDS and FM Global, there was no physical damage, but because it was an all risks policy and there was no specific exclusion, the judge ruled in favor of the insured with respect to coverage. Guaranteed that will be appealed, and we're going to see more of that as the months and weeks and months and years sort of roll forward. But that's an interesting case, and that is currently the jurisprudence in Canada. And that, I'm sure others will have views, and I'm not a lawyer, so I won't be speaking from a legal perspective. But this is a case that, in speaking with my legal colleagues, various firms across the country, we're hearing a lot about this case and the definition and of physical damage. So stay tuned. There's also litigation in there's some class actions that have started in Canada in relation to this particular issue, and there's a number of cases in the US that have started as well. And the other thing I'll mention is in Britain, in the coming weeks, they're testing some of the wordings of policies, and they're looking at a number of different wordings that would provide coverage to insureds. So stay tuned for that as well. So, bottom line on this, there's not a short-term fix. Some will have immediate coverage. Generally speaking, it's a bit of a wait and see to see whether coverage will kick in or not. So if we can flip to the next slide, please. What I do want to talk about is some coverages that are potentially available to you depending on the type of business you're in, that you should really be looking at very carefully. So there's three. There's event cancellation insurance, and so you want to look for that. Interruption by civil authority is sort of a terminology that you might see in various policies, and you see it actually in most policies. There's something about that. And then there's often some special endorsements. So you want to look for those special endorsements dealing with um, whether it's non-physical damage and things like contagious or infectious disease endorsements. So I'll start quickly with event cancellation. So really it's just that. It protects the policyholder against cancellation or postponement of a scheduled event. So typically conferences, sporting events, shows, that kind of thing. Now, there may be some exclusions in your policy wording when it comes to event cancellation. So again, every policy is different. So I encourage everyone to take a look carefully at your policy and your policy wording to see whether or not you have this kind of coverage. I'd say the most famous case of event cancellation that I've seen is Wimbledon. So they've had event cancellation insurance forever, never used it until this year, first time ever, and they got a massive payout. Certainly not enough to cover their lost profits, but we're certainly able to recover a fair amount, certainly all of the premiums that they've paid in the past. So they canceled early on, but knowing that they had the coverage. So take a look at your policy and check the wording. The calculation, by the way, if you do have it, is similar to the profits type policy wording, where you calculate your lost profits in relation to that particular event. Okay, so the next one I just want to mention is interruption by civil authority, and that really covers the insured when you're denied access to your business premises because of an order made by government or a civil authority. And the order may result from physical damage of the type for which you're insured, or maybe separate wording for things like, and I've seen, the outbreak of a notifiable or infectious disease. Okay, so look for your policy wording to see whether there's coverage. This is one of the wordings that's being tested in Britain as we speak in court. So we'll see what comes from that. We have some clients that have that coverage, and there is no physical damage test in their policies. The kicker with interruption by civil authority is that what we call the indemnity period is shortened. It's not like your typical business interruption where you have usually about a year of coverage. With the interruption by civil authority, it's much shorter. Sometimes it's 2 weeks, sometimes it's a month, up to about 2 months is what I've seen so far. We have a client right now that has a 4-week indemnity period with respect to interruption by civil authority, but they have 36 locations. So each of their locations is covered for 4 weeks. So that amounts to a fairly good chunk of money that they may otherwise not have considered available to them. So that's something that they're going to be thinking about. The key here is what caused the interruption. Was it a civil authority? Were you actually in a particular province? So in Ontario, were you actually told that you had to stay closed? If you were an essential service, you weren't actually closed, but you were partially closed. So there's some discretion there, probably on the insurance company's perspective to say, well, you weren't actually closed down. So there's going to be some interpretation as well there. I'll move on to special endorsements, such as non-physical damage or contagious or infectious disease. This is not seen generally in policies, but again, look for those special endorsements. It may be that you have coverage for something that relates to infectious disease, and it'd be worthwhile taking a look. Again, if you get anything out of what I'm speaking about today, it's take a look at your policy. Every policy is different. Wordings are different. It's interesting how wordings get changed over the years. Words get added, dropped, and when you look at the actual meaning of the words, you may find that you have some coverage. If we can flip to the next slide, please. That's great. Yeah, there we go. Perfect. So yeah, next steps, really take a look at your policy. I would encourage you to have your broker, and I would say more particularly legal counsel, take a look. Your broker is in an interesting position because they are generally on your side, but at the same time, they're paid by the insurance companies. So there is a bit of a conflict, an internal conflict for them. So I would have, if you have any promising wording, I would have it reviewed by legal counsel. And I would suggest there are certain law firms and lawyers that have very good experience in insurance matters and are dealing with these issues every day right now. So if you need some recommendations, I certainly have certain ones that I'm working with that are more national in scope, that have a view of a lot of policies, a lot of policy wordings, and a lot of different insurance companies, so they know their positions as well. So I'm happy to facilitate that as well. And we're looking at all of our clients' policies. So my expertise is in quantifying the damages in relation to policies, but certainly have experience in reading the wordings and can help advise as to whether it's promising or not. I would never advise from a legal perspective, but I would suggest whether or not it makes sense to go forward with some kind of legal advice. The other thing I'll mention is I know a number of the law firms are providing sort of pro bono reviews of your policies, so it really doesn't hurt to have that taken a look at. Some of the advice that we're hearing from the law firms is to consider filing a claim or putting your insurer on notice that you're going to be making a claim. And that allows you to, a couple of things. One is it puts them on notice, so it protects your rights to make a claim down the road within a certain period of time. And it also forces a decision by your insurer to either accept your claim or deny coverage. And I would say the denial of coverage is important because down the road, there may be some relief funds. I don't know this for any reason other than I have just an instinct that there may be some relief funds down the road with either the federal government or the provincial governments, much like we've seen with major disasters like the Fort McMurray wildfires or the floods, that kind of thing, where relief funds are set up to help organizations with dealing with their loss of profits during these emergency situations. So that's something to think about. I don't know if that's coming, but certainly if you have a denial from your insurance company, you'll be ready then to say, look, we asked for relief from our insurance company, they denied coverage, now they've got, now you can make your claim. And there's no other avenues of recovery. So quickly, just to finish up here, just in terms of if you are putting a claim together, you got to consider your policy wording very carefully because the policy wording is very specific in terms of how the calculation needs to be done. You want to track all your incremental costs. So any costs that you're incurring in relation to COVID-19 to mitigate your losses is very important. They're recoverable. If you have coverage, they will be recoverable, generally speaking. You might want to set up a separate GL code for these types of costs. And the last thing I would say is you want to document all of your mitigation efforts. So documenting everything you've done to sort of mitigate your losses, because that's an important principle in insurance recovery, is mitigation. So show how you've mitigated, what you did. Did you go online, have takeout, those types of things. Those are all things that are mitigating your losses, and you want to be able to document those things. So with that, I know in a very short, quick 10 or so minutes, hopefully I didn't go too far over. That's a quick overview, and happy to answer questions towards the end of the presentation or certainly afterwards. Thank you. I guess I'm passing it over to Pat now.
So from a valuation perspective, we're hearing from a number of our clients wanting to know what the impact is of COVID on their business. And there's real consequences, obviously, from that when these companies are going off to try to find credit facilities to keep their business alive and well. But it also has an impact on whether they're going to consider mergers and acquisitions as part of their planned activity going forward. Next slide, please. Before we go into the valuation specifically, I just thought it would be good to level set on two key elements. One is real GDP. What I'm presenting here is a slide that was put together by our KPMG US economics group. This one does, this crisis does feel painful because it is one of the more painful ones we've seen. Stacey made some comments that it's sort of unprecedented, and that's true. The last real major crisis we would have had would have been the global financial crisis in 08 and 09, and all the indicators are that this one's going to have a more heavy effect on overall growth. Next page. The second element to consider is really unemployment. This is a presentation of March and April unemployment figures for Canada. No real surprise that the accommodation, food services, as well as retail trade have been heavily affected. And a new category for April is really construction. So that there's been layoffs, etc., across the country in that regard. So unemployment as a whole obviously is increasing and affecting various sectors differently. Next page. When we look at the value of a business, typically we would turn around and look at cash flows. And often when we have a fairly stable business, we would try to normalize the level of cash flows and apply a multiple to it to come to a value. In situations such as COVID-19, there really is a need to take a discounted cash flow approach to the valuation exercise. And so we suggest companies focus in on sort of 3 key periods. Short term being sort of 13 weeks, trying to look at the key activities of COVID and how they've been able to react around it, trying to work their way through their recovery period, whatever duration that may be for their business cycle, and then trying to establish what a long-term new normal might be. Once you've established those cash flows, we again suggest you take a base case, worst case, and best case scenarios around that. And to the extent that you've factored in the risk, I'll say, in your cash flows, when you then look at your discount rates or multiples that are being used in the valuation, you want to make sure you avoid double counting, so that if you have taken the primary, I'll call it, hit on your cash flows, then it's not necessarily needed to double up on the risk factors associated with the discount rates as a whole. One thing that people will see is that interest rates have come down as a whole, but in behind all of that is because of the volatility and the uncertainty of future business operations, the actual cost of equity has gone up, and overall the discount rates for the majority of companies have also gone up accordingly. As the value of your business changes, you also have to look at the final element of really your capital structure. So to the extent that you have more debt within the company, that means there's going to be less value to the shares of the company as well. So all those different dials play out as to when you're looking at the values of business. It's important to I would say the key takeaway on all of this is really to look at sensitivities of your business. Obviously, there's been drastic changes to the business environment in how you, in knowing your business, can define what that new normal is going to look like and the path to get there. I think that's going to be critical in that regard. So there's been a question that's been posed regarding business value, and I would just be interested to get a response as to whether you feel your business has significantly increased in value because you've had an opportunity to, I'll say, take advantage in some way of COVID, no real change, or you have a decrease in the value of your business. I'm not sure if we can let that run, Lynn, or whether we have to take a moment now. Or I can keep going with the slides. Oh, okay. So that's interesting that several feel that they haven't changed their business. So that's a good sign, and not surprising that there would be somewhat of a decrease as well. So somewhat balanced, I'd say. Going on to the next slide. We've outlined here 10 different areas for business owners to consider when they're trying to factor in their path forward from a business environment. We can't talk to all 10 of these at this time. So I've decided to focus in on just a few of them. But it's important that you try to give these holistically a review, because these are important for both running your business. They're also important elements that the bank or other lenders are going to consider. And they're also important if you're considering a potential merger with a business partner. First one I'd like to point to is really the business model. What we're seeing is a number of companies are trying to build out their online presence as a means to attract more customers and potentially reduce their fulfillment costs on that business activity. This can be an area that people naturally expand into, but to the extent that it is a challenge for your business, you may need to find a partner who already has some kind of a platform that's already established that you can help leverage. Another area that's going to be important is the real estate side of your business. We feel there's substantial changes and considerations for how people are going to work in the new normal. It will take some time for these changes to totally flow through the marketplace as leases run their course and companies adjust to the new normal in terms of their overall working environments. Employees as well are an important element of all businesses, and the number of government programs that have been put forth to provide support have been very helpful in helping those companies work through the near-term issues and create a plan for their future. But ultimately, you may need to optimize your employee base through either downsizing, or if you feel there's opportunities for growth, you may wish to take advantage of key skill sets that are going to be available in the market and look to add to your base of operations. And finally, there's a number of the ones listed here. I'm going to put them, group them all together under working capital. It's a very important piece of the business to manage during the volatile markets. We strongly suggest you communicate with your customers, suppliers, and lenders on a regular basis to get critical information from them to manage your business on a timely basis. And really suggest you be realistic in your assumptions. If I take you back to the sensitivity analysis that I suggested you consider, really look at what an extra 30 days collection cycle might add to your business, and how you plan to fund any shortfalls that get created from a result of that. Next slide, please. All of this then leads to the ultimate question of how could M&A influence your business in a COVID-19 situation. When you execute a merger or acquisition, you're in effect enhancing your company's competitive position in the market and improving its financial credit. In addition, you typically get new business relationships, expand your offering of products and services, heighten brand recognition, and increase capacity at a lower cost. The fundamental premise of a merger or acquisition is synergies that can be created by the combining of these two entities. Often people don't spend enough time looking at those synergies, and in simple terms, you need to look at it from two perspectives. There's going to be hard synergies, which are often cost savings. There's going to be soft synergies, which are more revenue increasing opportunities. As you negotiate or consider your positions in the M&A activity, especially in a volatile market, there's going to be a wider difference between value, which is a theoretical concept, and the actual price that people will pay for your business. And what we generally would find is the people who have the cash tends to have the higher or the better negotiation strength. So when you're going into these negotiations, consider what your business is, how strong it is, recent changes that you've made to the business, and then also do a realistic assessment of where you are in the negotiation strength before you go into those talks with a potential partner. On the screen, we've outlined sort of four positions within the M&A cycle. You could be a buyer with strong cash positions, strong management team, and are looking to buy a weaker competitor, or expand into new markets. From a seller perspective, you may be lacking the financial resources to weather the storm. You may also be looking to changes in your business that you're not just capable of pulling off in this current environment. The category of partnering or doing a new joint venture, that may be a critical area in your business that you cannot, I'll say, necessarily fix, but you have many strong elements of your business that if you can come up with a new offering or something less than a full merger, that may be an opportunity for you. And then lastly, I think you have to take a realistic view at whether you should just be focused on stabilizing your business in the near term. I personally think a number of companies are going to be in that category, but to the extent that you are short cash or have cash that you want to put to work in growing your, or establishing or saving your business or growing your business, I think that'll be an important element in the next few months that we see. That's it, I think, and turn it over to Paul.
Okay, thanks, Pat. I'm Paul Sammut, Senior Manager in KPMG's Cybersecurity practice based in Ottawa. So Pat and Kaz have talked about the many impacts that the COVID-19 pandemic has been having on the way our businesses are operating, and it's also had a dramatic impact on the way that we as employees are now accessing systems and resources, and the ways that we are interacting with each other. And we've gradually become used to this virtual way of working. Unfortunately, COVID-19 has also represented an opportunity for cyber criminals and fraudsters to target your systems and your employees, given these changes. Next slide, please, Kelly. So I'd like to take you through some key activities, both for immediate focus and in the medium and long term as we look to rebound in relation to cybersecurity and business continuity. Focusing first on security. First step is to protect your employees who are working remotely and potentially for a foreseeable amount of time. I know some organizations such as Shopify have talked about remaining virtual or keeping employees in a virtual environment at least until 2021. We've seen a range of targeted spear phishing attacks related to the COVID-19 pandemic. This is where an email is crafted by an attacker to target an employee or individual to get them to click on a website link or provide their login credentials, for example, for their Office 365 access. And if you think about the sheer volume of information that organizations need to share with either customers or employees about changes in processes, policies, or activities, it makes it an easy attack vector for cyber criminals to use. Additionally, given the government financial support that's been introduced in the last few months, we've also seen very targeted phishing via mobile text messages, emails, and phone calls related to being able to make fake claims for financial support. And it was even reported in March that over 11,000 website domains have been registered related to COVID-19 or variations. And the majority of these are thought to be used as part of phishing attacks, diverting users to these domains and bogus websites. So it's important to educate your employees on what to look out for. And we've been working with some clients to run phishing campaigns to test how susceptible their employees are. And this enables the organization to then give them targeted security awareness training. Next, you need to understand your immediate risks and reduce your potential exposure. KPMG has been helping our clients by running penetration tests on their external servers and conducting vulnerability scans so that businesses can better understand their weaknesses. And now, given our dependency on remote working, any outage or attack on your infrastructure could have a huge impact on the productivity of your entire workforce. A key part of this is your VPN or virtual private network servers, and those are the ones that are often used for connecting remotely. We've seen a number of organizations be targeted via this attack vector and subjected to ransomware attacks. For example, a few weeks ago in Toronto, a fintech company had a ransomware attack which came in via their VPN servers, and this resulted in them shutting down their systems and services for an extended period. So it's really key to ensure that they are patched up to date and also to have a better understanding of any potential vulnerabilities of any of your external facing servers by scanning them regularly. Excuse me. Unfortunately, there's also been an increase in the potential insider threat, i.e. that coming from your own employees. Due to greater job uncertainty and potential financial hardship, this increases the likelihood of your employees being either disgruntled or subject to coercion or blackmail in order to sell your company data and trade secrets. So it's important to improve your monitoring of employees and any unusual access attempts at this time. And lastly, as Kaz alluded to earlier, you should be reviewing your insurance, and your cyber insurance is no exception, to ensure that it's the right fit for this new environment and the additional risks that it entails with all your employees working remotely. And these are the things that business owners and their teams should be focusing on right now. But there's also a number of other things you should be considering around cybersecurity in the mid and long term that will protect your business as you look to rebound. In the medium term, reevaluate your threats and risks given the changes to your organization and your operating processes. We've been performing threat risk assessments or TRAs and baseline cybersecurity assessments with a number of organizations recently, as well as beginning to look at how access to their data and systems is controlled given the rapid and sometimes enforced move to cloud-based services. In the longer term, we're expecting there to be a lot of need to have cloud transformation strategies for those larger companies to consolidate and manage further moves of systems to cloud-based services so that this can be done cost effectively and securely. And finally, it's a great time to review your overall cybersecurity posture and maturity to understand how strong your controls are compared to your competitors, given the rapid changes we've all seen. So I can see the poll results have come in, and since the question was, since the pandemic started, has your organization taken additional action to improve your security? And 40% have said yes, which is great to see. 30% have said no, certainly worth considering, and then 30% not sure. So definitely worth reaching out within your organization to see if people within your security or IT teams have taken any additional action. Thank you. Thank you for your response. Next slide, please, Kelly. So now we'll move on to business continuity. And obviously, everyone's been invoking their business continuity plans as we've all moved to virtual teams. But your immediate focus should be, what are your key dependencies? Assess both systems and personnel to take action to reduce any dependencies, because any outage could result in all your operations effectively stopping until the issue is resolved. And also ensure that your BCP or your business continuity planning is running effectively and all key services are operating and any interdependencies have been identified. Reassess how you would handle a cyber or major IT incident given the changes to these operations too. And in the medium term, which I guess is where we are now, it's a great time to capture any lessons learned from invoking your BCP plans and working in this new environment so that you can incorporate improvements into future updates. Next is review your suppliers. Your suppliers and partners are likely to be going to be under pressure, whether operationally or financially over the next few months, and their operations may be disrupted too. Think about who are your critical suppliers and how would you manage if they're unable to operate, including any disruption to your key managed service providers. Are there any steps you could take to reduce that dependency, including using your own team resources? And are you discussing the implications with your key suppliers? Do you have the right points of contact with them? And finally, have you identified which IT suppliers may come under financial pressure? And what would be your alternative sourcing strategy if, heaven forbid, they did fail? With BCP, when the plans are being created, we often dealt with kind of abstract concepts. So when we discussed pandemics in the past, an organization might think about it in terms of, say, the way SARS was dealt with, or people will just work remotely. However, the sheer impact of what we have seen with COVID-19 means that organizations really need to reevaluate potential scenarios and the extent to which situations can develop, given many of us may not return to our offices until 2021. It's also a great time to perform tabletop exercises covering crisis management, disaster recovery, or a potential cyber attack, to ensure your people know how to act and what steps to take, given now you are all working remotely or virtually. And finally, looking longer term, consider conducting a full business continuity planning review. Given the change in landscape and your operating environment that you're operating in, it's vital to perform a full review of your business continuity plans and reevaluate all potential scenarios and your business impact analyses, or BIAs, so that your plans remain effective in the future. Additionally, ensure disaster recovery and crisis management plans are in place and up to date. Review and update them in line with your BCP changes and changes to your business. Finally, of course, test these again so that everyone knows their roles for future events as we look to rebound. Back over to you, Stacey.
Thank you, everyone, for listening and being a part of today's session. We hope this has been helpful. I know this term is used a lot, but we are in unprecedented times, and this really is true. KPMG has a great team here in Ottawa, and our goal is to help businesses in Ottawa achieve the best possible outcome right now. As mentioned earlier by Lynn, you'll be receiving a playback along with a PDF of the presentation from today. So please, if you have any questions about any of the topics we've covered, please reach out. Thank you again, and stay safe.
All right, thank you, Stacey. We're going to take a very quick break to give our audience the opportunity to post their questions in the chat for our experts. I do want to offer a very quick apology to Patrick. He had 3 great poll questions for us today. This is my first time managing the pollings for one of our speakers, and I made a little bit of an error. So I'm going to launch the final one right now and ask that you have a look at it and answer it. And in the meantime, I'm going to take this opportunity to once again thank all of our partners and sponsors that helped us bring this webinar to you today. I'd like to thank the Ottawa Citizen, who is our community partner, and I would like to thank Enbridge Gas, who sponsors events, and of course our team at KPMG for taking the time to gather their experts together and create this amazing webinar full of great information for the business community. And having said that, I'd also like to share with you some of our upcoming webinars. These are all from our Rebound and Readiness series. So on June 11th, this Thursday, we're going to have Louis Eisen come and talk to us about how to write new rules and make them work. So this is a very interesting topic. A lot of us are going to be posting rules about what people can and can't do in our places of business. And Louis will be able to help you craft rules that will make people compliant and engaged with them rather than resistant. On June the 16th, Kyle Morrow from Fasken is going to talk about, is your business inadvertently lobbying during COVID-19? And for a lot of people, that answer is yes, surprisingly. So this will be a very interesting session. On June the 18th, I invite you to register for this. That one is titled Rebound Readiness Done Right, Why IQ Offices is Poised for Success and How They Got There. IQ Offices has come up with a work acclimation plan. It is a masterpiece. It's an amazing document, and it will build confidence with both of their clients and their tenants. And they have graciously offered to share this plan with the general public and the Ottawa business community. So I do encourage you to register for that. It is going to be an amazing event. And finally, with on June the 23rd, Matt LaFrance from Grade A is going to talk about the future of work, leveraging your IT for culture and engagement. So please do join us for the rest of these webinars. Now, a number of questions have come into me through the private function in the chat. So I am going to first share the final poll results for Patrick. And Patrick, did you want to comment on those results in any way?
They were on my screen and then they went away, but it looked like the majority of people were looking to, oh, there they are, to stabilize their business and potentially do a partnership or a joint venture, which is you know, a good solid outcome, I think, for the market as a whole, because I think sometimes getting into a buying and selling at a low point is not as advantageous. So that's a, you know, realistic results there in the surveys.
Thank you, Patrick. So I'm going to start diving into the questions. And in no particular order, and I'm going to put this question actually to all three of our speakers this morning. The first one is, what's the biggest threat to organizations right now? Maybe Kaz can start.
Yeah, I mean, I can speak from a an insurance perspective and a lost profits perspective. I think a lot of organizations are, you know, suffering from lost profits, and right now there's no mechanism to recover those lost profits. There's certainly a lot of opportunities from the federal government for wage subsidies and loans, and there is some cash flow there, but loans have to be paid back, and wage subsidies are only as good as if you can continue to operate and stay afloat. And so the lost profits piece, which is what is normally part of you know, any kind of other sort of disaster that you an organization could possibly endure, there's no recovery in this state so far. Little recovery except for insurance, and the recoveries are sort of I would say the exception more than the rule at this stage. So I think they're facing you know, lost profits, and that ability to continue is going to be challenging for a lot of folks.
I would say the biggest threats to business right now is building on Kaz's comment to some extent, cash flow management, having ready funds available to take their business up back to, I call it the new normal, and trying to decide or to figure out what realistic payment terms are going to be to their suppliers, but also from their customers, et cetera, as they try to, you know, manage that balance of having enough cash to pay their bills and their employees and their own obligations to grow their business.
And just to build on Pat and Kaz's point as well, in terms of a cyber attack, it's never, you know, it's never a good time to have a cyber attack. But if you're under severe financial constraints and you know, you've got some operational challenges with everybody being kind of spread around virtually, then to actually have a cyber attack now, you know, is potentially devastating to your business. So it's kind of, what can you do to reduce that immediate risk is really key. Thank
you. So I just got a great question through the private chats, and it's a kind of a thought leadership piece here. I'm going to direct it first to Patrick, but certainly Kaz and Paul, if you'd like to chime in, please share your thoughts as well. The question is, will the US elections or volatility be a concern for Canadian businesses?
Obviously, they're our biggest trading partner as a country. You know, policies around trade have been in the news even well before COVID. So to the extent that there's more restrictions on how you can do business with the US, it will have a direct impact on Canadian business, no doubt. From a US election perspective, I'll call it, I'm not smart enough to be able to make that call as to how that's going to play out. But, you know, I think obviously the US economy and again, trade sanctions or government policies that they put in place as they react to COVID can and might have implications on Canadian business as a whole. So.
Paul, what about from a cybersecurity perspective? I know that in the United States, they've got a different viewpoint on cybersecurity issues and government access to people's privacy on the internet. Is the US election going to cause an issue for Canadian businesses in that regard?
We've actually been working with a number of Canadian businesses who have some US operations. So often these are software as a service companies, cloud-based services, and they may have US data of whether it's medical data or other personal data, and they have to deal with, have to comply with HIPAA, which is the health regulations, and other such requirements. So they're facing increased demands from their US customers or clients to demonstrate that they are taking cybersecurity seriously, and whether that's they then have a SOC 2 or some other kind of service report to demonstrate that their cybersecurity controls are effective. We've certainly seen an increase in that over the last few months. So whether that has directly related to the US election or not, but it's certainly something for Canadian businesses operating in the US to consider.
Thank you. Going back to the questions that have been coming in, the next one is, should organizations consider submitting a claim for business interruption if they are not getting a coverage response from their insurer? So Kaz, over to you.
Sure, that's a great question. Yeah, I mean, I think as I'd mentioned earlier, if you think you may have coverage and you're asking your insurer for whether or not they're going to cover you for your losses and you're not getting a response, you need to get some kind of response, whether it's a denial or an acceptance of the claim. And I think that serves a number of purposes. It really drives your next steps. If there's a denial, your next steps could include thinking about litigation. Your next steps could include, okay, well, that avenue is out the door and I'll have to move on and figure out other ways to help recover my business. But at least you know where you stand to be able to take sort of those next steps. So putting a claim in really is helpful. I would do so only in the context of having received advice from your legal counsel, because there's other strategies to get a response from your insurer, and you might want to explore those before putting the formal claim in. And then lastly, I would just say that if you put a claim in and you get a response from your insurer, which could be a denial, at least if there's other avenues for recovery through federal relief funds, if they ever come forward with that, typically there's a requirement to say you've exhausted other avenues for recovery. So you could at that point say, look, I've got my letter from my insurer that said they're not paying me anything, so now you can recover the full amounts from any relief funds that may become available.
Thank you. We had a follow-up question to the question regarding the US and the elections there, and that is, will we see more made in Canada products due to COVID shortages? And I think that's a great question for any of you to address. It'd be interesting to know if any of your clients have made the pivot to being manufacturers or plans to scale up their manufacturing. That's an interesting question. What do you guys think?
Personally, I haven't seen any clients that are picking up the enhanced manufacturing element, or I'll say changing their supply arrangements, be it with the US or with other countries as of yet. I think in the automotive sector, there's been obvious delays in bringing certain parts in from Asia, etc. But some of those are going to be done at a price point that wouldn't allow them to be necessarily manufactured here. So I think all companies are going to be looking at their options, but it may drive more Canadian-built solutions, but it all has to be offset or weighed against what the price point here is in Canada versus what clients or the end customers will be prepared to pay.
Thank you. So I'm going to ask one final question, but I'd love all three of you to comment on it if you would. And that is, what's the one thing in your opinion should companies be doing right now?
Maybe I can start with that one. You know, and I'll take it from the insurance perspective. There's lots of things, of course, companies can do right now, but from the insurance perspective, grab your policy, the whole thing, you know, whatever, 200 pages of it, which is not very fun to read. Have someone take a look at it for you if you're not interested in looking at the whole thing. But the wording is very specific to every company. And you may be surprised that maybe there are some coverages that could provide you with some relief. So I'd say have that policy reviewed by someone that you trust. Typically, it would be someone, a legal review. And certainly it's something that we've been doing for all of our clients to give them an idea as to whether there may be coverage. So I'd say take a look at your policy.
Thank you. Patrick?
I would say there's really sort of two things. One is take the cash flow model that you have and really sensitize it to see if where the pressure points are, and make sure you have sort of a plan B for some of those elements that may not come out the way you first think it's going to, and have, you know, as much reserves built up for your business as possible. I'd say the second element is draft your return to work policies and the likes. I think you mentioned an upcoming presentation that the Board of Trade is hosting in that area. But I think having a solid plan of how you're going to get back to work and integrate your employees and customers would be critical.
Paul?
Yeah, in terms of cybersecurity, it's really key now to just spend some time to look at what are your threats and your risks and what can you do to reduce the likelihood of you being attacked. I mean, for example, we were working with we were actually due to work with a client a couple of months ago to perform some penetration testing to test their external servers, and literally the weekend before we were about to begin, they suffered a cyber attack. So if that, you know, if that test had happened a week or two before, they would have had a chance to they would have known what the vulnerabilities were on their system. They would have been able to patch them, and chances are they wouldn't have suffered the attack. So yeah, I would just stress not to delay, because it can have a huge impact on your business.
Thank you. Those are great answers. I'm looking at the time now and it's 11:57, so I think this is an excellent opportunity for us to wrap up today's webinar. I want to remind everybody that the team at KPMG has made an offer to answer your one-on-one questions. We recognize that some of the things that we were talking about today are sensitive and perhaps you don't want to share your questions with everyone. So please do take advantage of that offer. Any help that you can get is worth it, and these people are clearly experts in their fields. I do want to share a comment that just came in. Somebody said, please convey my thanks to the speakers for an excellent and useful presentation. And I have to second that opinion. I see some thank yous and notes of appreciation coming in now. So KPMG, you guys have been great supporters of the Ottawa Board of Trade, great supporters of the rest of the Ottawa business community. And we thank you for stepping up and giving your time today to help inform and instruct us on these critical issues. The webinar recording will be posted within about 48 hours. And as soon as it is, we'll send out the link as well as the slide deck for your reference. And if you need to reach KPMG before that time, please send me a quick note and I will be happy to connect you with the right people. Thank you very much, everybody, and have an amazing afternoon. Bye-bye.
Thanks, everyone.
Thanks, everyone. Bye now.
Bye.
Thank you. Good to see you guys.
Bye.
Bye.
Bye.